Joining in the show, we've got Jack Lin, who's the head of Asia and Middle East at Pioneer Investment Management. Jack's firm, in fact, manages something like 180 billion euros in global assets. Jack, good evening, and thanks so much for taking time out for us. Let's begin by talking about what you're making of India. This year, we've seen something like $15 billion worth of inflows into the country. How do you see the run rate for calendar 15 and 16? What's the potential there?
It's always challenging to predict future run rates because it's dependent on so many factors, global and local. But let's focus on the factors which are within the control of India. I think a large fundamental reason why the foreign investing community has become so interested in India recently is due to all the exciting developments that are happening on the ground here. And that part is within the control of the Indian people and the Indian government. I think a key element to determine future foreign direct investment flow rate into India would have to be what happens in the next 2 quarters and 4 quarters with the continuing of the reform process. Currently, based on all that we can see, we still remain quite positive on what the current government in India is doing, and we remain optimistic that the trend will continue towards more economic reform and greater liberalization.
Jack, from the current earnings rate of 15–16%, over the next 2 years, where do you see the earnings of corporate India move up to?
That's the key question. That relates to the current valuation levels in India. Many people would ask me, is the Indian market overvalued, undervalued, or fairly valued at this stage? The key question is going to be, what are the growth assumptions built into the current price? Now, the most recent earnings announcements haven't really set the world on fire. However, for those companies that we're analyzing, we still believe that there's good fundamental reasons why we expect the growth to be there in the future. But of course, we will have to wait and see what the actual reality is.
Jack, give us a flavor, of the investors, large global investors. Which are the new regions from where you see the potential of money flowing in gradually into the Indian markets, especially the areas where traditionally they've not been investors into India?
I think the interest level has spiked all around the world. I travel to many different markets. People ask me about India, so I think the interest is quite broad-based. In terms of the markets, the regions where the capital will actually start flowing, I think it's too early to say. There's not an emerging trend. However, I think India is definitely on the watch list of most global investors today.
The last time we logged into a bull run, Indian markets actually peaked out at about 22x forward earnings. But with the changing dynamics of improving growth, lower inflation, good policy and lower commodity prices, what kind of PE do you think India could trade at, say, over the next 3 to 4 years?
Well, those fundamental factors that you've cited, if even more than half of them become true and become true in a material way, we could very well see a re-rating of the Indian market overall, and that's the scenario where we could see the PE levels shift to a fundamentally higher level.
Jack, our last question for you. Which end of the Indian market is looking far more attractive now? Is it the large caps or is it the mid and small cap companies?
We believe that there's an opportunity in the near term for Indian mid caps, and that's hence why we're launching our fund at this time.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.